We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Tony Greer, editor of the Morning Navigator. How are you, Tony?
Tom, what's up, man? Thanks for having me back.
Excellent, as always, to speak with you, Tony. And, I'm looking forward to this conversation because in preparation for today's interview, you responded to my email that there's, obviously plenty to talk about and that you're actually wildly bullish and long the stock market and gold, bullish and long S&P, industrial miners, and uranium, and currently bearish on bonds. So before we dive into each of those individual components, I want to understand, let's say, the backdrop that you see and the driving force behind this positioning. Not many people that I speak to are bullish the stock market and gold still. So what do you see as the, let's say, the fundamental driver for this?
So they're two, in my opinion, not really correlated trades, right? They're two totally separate trades, which I can dig into and really appreciate. So my gold bull scenario is really based off of the fact that I see this market as an analog to 94, 95, the 2023, 2024 transition, where a lot of people are seeing it as like the dot-com peak of like '01 because NVIDIA just took off and things like that. What I see, to compare it to 94, 95, in 1994, the Fed raised Fed funds basically from 3% to 5.5%, and they got as high as 6%. The stock market was flat, down 1.5% or so in a really volatile year, right? Mm-hmm. They were dealing with inflation and they were dealing with the economy overheating a little bit, and that's sort of similar to where we are now, in my opinion. You can argue a lot, about the nuance of the economy, but it was a volatile year in the stock market, and we came out of 94, and from 95 through 2000, Fed funds were between basically 4.5% and 6%. So they peaked in 94 with a volatile stock market, no returns. And then once the market saw that the high in Fed funds was in and rates weren't going to go higher than that, it was party time in the stock market. And we got a 34% return in 95, 20% in 96, 30% in 97, 26% in 98, and 19% in 99 before we got to the bubble bursting, right? Back then we had tech tailwinds. We had, Amazon.com going public and the beginning of Napster and being able to download music to your phone. And that was one, part of the beginning of the new wave of technology. Mm-hmm. And now we have AI and Bitcoin, right? Like new technologies that are obviously, wildly popular, becoming more and more widely used. And we've got companies that represent them like NVIDIA, which to me has sort of clearly become the disco ball in the stock market, more important than Apple, which looks like it's taking a back seat now. And so with that backdrop, I could be, broadly speaking, bullish the stock market, right? I think that when inflation rears its ugly head, which it feels like it's starting to do again, the Fed is going to come back barking at it and make sure that the people know that they are not going to allow inflation to bubble up toward 9% again. It may bubble up toward 5 or 6% again, and they'll raise Fed funds accordingly at that point. But in my opinion, now we're looking at rate cuts, more likely than rate hikes. So we're going to see a little bit of an inflation impulse, which is generally bullish the stock market. Mm-hmm. And so I have that view as we break out to new highs that this can keep going. Right. So the analog to 95, 96 is clear. Who knows what happens the next couple of years. But to me, this is the transition year where the stocks can really lift off and break out. Mm-hmm. But I'm paying the closest attention, though, to the relationship between the sort of tech markets and the commodity markets. Right. It became clear that NVIDIA found its peak. Right. Everybody was chasing that AI craze. The stock found its peak against the backdrop of the creation of 3 and 4 times levered ETNs on Mag 7 and AI and semiconductor ETPs in Europe. So they get now, like, against the backdrop of triple and quadruple levered ETPs in this space, tech stopped going up, right? You can't help but notice that. NVIDIA, as we speak, is carving a new low for the recent move. It's in the 850s now. It's $100 off the highs. That leadership has cooled off, right? Where's the money going? Since March, money has been going straight into the commodity complex. Right. And that's kind of how I look at markets, as I monitor trends and I look for things to change. And we just had 7 months straight of negative performance in the Bloomberg Commodities Index, which is largely gold and oil. Right. Let's just kind of call it what it is. And after that 7-month slide, we had a 2.3% rally to break the 7-month slide. It's interesting to me that the BCOM chart this year has got a dip into a new low below 2023's low, and then an immediate recovery of the moving averages, right? That is a really positive signal of a false breakdown, right? We had a sideways range. It looked like it wanted to break down, failed auction to break down, and right back up through the recent highs, and now we're above the moving averages. So that's a major sea change in commodities, right? It's largely driven by gold and oil, as we just mentioned. So in March, I think it's important to note that we saw a 3% rally in corn, 4% in copper, 6% rally in WTI crude oil, a 7% rally in gasoline, 9% rallies in gold and silver. I mean, the tape is screaming something changed, right? Stocks participated accordingly. Equity leadership changed. All the leadership was in natural resources and housing. Right? Tech was mixed to flat, semiconductors up, the other sectors are down. And then you had a big miners rally. You had XLE and IGE, which are E&P and natural resources, both up 10%. Refiners are exploding. XLB and XME are up 6% each. So that's the stuff that I see as changing in March. Now, I think it's important to pay attention that it's happening against the backdrop of a lot of war saber rattling. Right. So I think this is maybe a little bit of a referendum on, potentially the U.S. at a prolonged war, maybe with China, with Russia, through NATO, however we want to, posture that without getting too political. But the commodity turnaround looks like a referendum on World War III developing. And I don't try to throw that around very loosely, but what's going on, I mean, we're provoking the hell out of Russia. It seems fairly obvious that this is going to escalate, and hopefully it doesn't go nuclear on us, and we'll see what happens. But that's the sea change that I'm trying to pay attention to, against that backdrop of a war footing, against that backdrop of ISM manufacturing going back up above 50, with all of the underinvestment that we've seen in commodities, it would appear that if we start coming after the underlying commodities, that all of that lack of investment is going to bite us in the ass, right? And we're going to have to go ahead and put more money into the mines to get more metals out of the ground, and more money into E&P to get more oil out of the ground, which it seems like the E&P companies are doing a great job with right now. And so I just like to notice that's something to me that made me sit up in my chair. And I've pivoted the view matrix, which is my portfolio of positions, to largely be commodity based. I mean, I'm long gold, I'm long crude oil, I'm long E&P stocks, I'm long uranium, physical uranium, I'm long metals and mining stocks. So that's kind of how the book is positioned right now. I just took a 15% trade out of the S&P because as tech turned, S&P stopped going up. And so I kind of just took profit on that trade, and I'm looking to get in again. And so that's my layout right now. Tom, I don't want to take the mic all day. I want to let you ask a few questions about it, but that's how I'm looking at the world.
Absolutely. That was a perfect way to lay everything out, Tony. And I appreciate you kind of explaining how you're seeing all of this. I want to start maybe by talking about what you mentioned about the Fed, jawboning, let's say, against inflation. Do you think that is going to be hawkish posture and hawkish talk against inflation that will let the markets do the work to tighten those monetary conditions rather than actually changing the overnight Fed funds rate?
Well, that's the Federal Reserve specialty right there, isn't it? Right. That's why when people ask me, Tony, has the Fed lost control here? Are they in too big of a pickle that they can't get out of?
Mhm.
And I say to myself, you put me in charge of money supply and the narrative, and I'm going to tell you that I don't get in pickles. I don't get in pickles with the narrative control and the money supply control. I just control what I need to be done.
Mhm.
Now, it was an unbelievable Jedi mind trick that they pulled on us when it became clear that they had battled the inflation, to its knees, oil from 135 to $60, right? Like they kind of took the sting out of the inflation data that the executive orders of the Biden administration clearly caused, because that's when inflation spiked. It doesn't take anyone beyond sixth grade to be able to understand that. So once they got the inflation sort of fire out of the tape, we can see it coming back sort of in the commodity complex. But then, if you remember, we went to 6 rate cuts next year. Right. We were just coming out of a hiking cycle to battle 9% inflation back down to 2 or 3, whatever you want to call it. And all of a sudden we pivoted to 6 rate cuts next year. Right. And the whole world, I mean, I know I was like, I'm sure the whole world was like, wait a minute, that seems a little aggressive, considering we never changed this politically embedded inflation that we're kind of, going down the path of trying to transfer to electronic vehicles, et cetera, et cetera. So we never got rid of that politically structural inflation, yet the Federal Reserve was trying to tell us that we were going to cut rates 6 times this year. Right. So that's how they swung the momentum into a totally deflationary picture at the bottom of the commodity move. Right. And so commodities sold off with that. And they're like, oh, we're pricing in deflationary atmosphere again, a weaker economy. And then that never materialized. And then you had the gold breakout. Right. And gold was clearly, to me, breaking out, obviously, against the backdrop of this war footing, but also against the backdrop of I felt like it was breaking out above 2,100 against the news headlines getting out there of our deficit going up $1 trillion every 100 days. Like when that cat got out of the bag, people were like, that's crazy. I don't have enough gold. Right. Like, you know what I mean? And I feel like they're looking at, all different things that nobody's really talking about and how inflationary it could possibly be, but it's getting priced into the markets. The markets are looking at the open border and saying, oh, we're writing checks for all these people. Got it. Right. Like it's coming. Right. There's going to be more monetization, more borrowing, more, fiscal insanity, monetary insanity, the whole thing. So I think that that's what the gold breakout is all about. And it doesn't shock me that people are also piling into Bitcoin at 70K. It really doesn't, because at that point, if you're making a bet on, a weakening system or something like that, let's put some currency out. Let's put some of our net worth outside the system, right? In Bitcoin, that's it. It's kind of in its own world, separated from the central bank management. So that's kind of, another dynamic that I see that makes me bullish gold. And with that scenario, more importantly, Tom, the gold breakout is about lulling everybody to sleep 3 times with that breakout above 2,100, where all of us were like, okay, here it comes. And then we failed and went back to 1,900. And then we got back up there again and we were supposed to go. And then we failed again. Right. And now breaking through the other side, as a trader, you better put the onus on yourself to be long that security on the other side of that breakout. And as a former gold trader who ran a gold pad, I mean, that thing shines its light on me every day. And I'm responsible to be right technically, or right-footed technically, when gold is breaking out like that. And when it's breaking out to all-time highs, there's nothing more fun than being long, right? Because where she stops, nobody knows. You've got the street raising estimates on price targets. You've got a little bit more speculative length in it, although gold open interest is nowhere near alarmingly high levels. There's no huge spec length to draw a bullseye on, a big 50, 100,000 contracts of length. Open interest is 500,000 contracts. And that is in the middle of the sort of 350, 650,000 contract range that we've been in for a decade and change. So if we're in the middle of that range, there's room for open interest to grow. There's room for total ETF assets, which have backed off from 110 million ounces to 80 million ounces. There's room for people to invest right there. and there's room for the spec long to get longer. And above here in new high territory, I'm not going to expect the thing to curl over when, we're marching in on NATO and we're having conflict with Russia and conflict with China and all that. Like, I'm staying long my gold. And I think a lot of people have the same idea.
Mm-hmm. Tony, you wrote that the gold rally is just beginning in some respects and can get disorderly. So what do you mean by disorderly?
So when something's breaking out to new highs like this, and it is a clear, there's only buyers up here in my eyes, right? There are people that are long that are adding to their position because they're seeing more fiscal irresponsibility than they've seen, right? They're having to cover a short or something like that if they had a technical short on. There are central banks that are buying at the market, right? I think they're probably diversifying out of U.S. treasuries and buying gold with the dollars that they're getting in return for their treasuries. It kind of looks like that's what's going on. And so when things are breaking out to a new high like this, and it feels like higher prices uncover buyers, that's when I'm like expecting to wake up one morning and see gold up $300. Mm-hmm. Right. And it may not be on anything. It may be on a headline. It may be on, God forbid, an explosion somewhere. It may be on a statement from a head of state. I don't know. But I do expect people to say, oh, okay, gold is breaking out. I don't know where it's going, but I don't have enough on the pad for what's going on in on the headlines. Mm-hmm. And so there's somebody that just may need a fresh allocation and say, okay, this thing was capped at 2,100 since 2012, just broke out. It's a few percent through there, but it's proving to me that it's through and that it's not going to turn and dump. Looks like it can go to 4,000 or something like that. Why don't we buy a couple of $1 million worth of gold again? You know what I mean? And like, next thing you know, it's like, okay, there's the next leg. Mm-hmm. And, the other thing is that I don't feel that there's any kind of bubble in gold. I think that it's fairly orderly. I don't feel like Twitter is like gaga bullish gold or anything like that. If anything, I feel like there's a dynamic where maybe people are too bullish silver.
Interesting.
And, can silver go along? Sure. But Tom, I face a lot of questions about why isn't my silver going up like gold? Mm-hmm. And that just tells me that people bought silver because they expected to finally, start performing like gold. But to me, in the last several years, with the push toward electronic battery power, et cetera, silver has become even more of an industrial and less of a precious metal than me. And so maybe that market's a little more balanced, and maybe there's not as much interest to speculate like there used to be in the rich man's casino because we got Bitcoin now, right? So that's just some of the things I see that maybe detract from silver's breakout. It's like, to me, the story is in gold. Central banks are buying gold. Physical guys are buying gold. Gold's breaking out technically. I want to make sure I'm in the right metal. Mm-hmm. Gold's at a new high. Silver's not. A new all-time high. Silver's not.
Yeah.
Start with that observation, right? There are two different scenarios going on there. So,
yeah, it seems like with these, you kind of mentioned these head fakes in gold, and I would say, a lot of frustration for a long time in silver as well. It almost seems like most people almost aren't believing this rally. And I've seen lots of, Twitter posts, whatever, just lots of commentary, even in the gold communities, asking me, do you think this breakout is real? It's so interesting to finally be here, finally be pushing new all-time highs for days on end, weeks on end, and even have the gold industry wondering and doubting it to see if it's going to hold.
Yeah. Yeah.
And I think that definitely plays into that psychology of investors wanting to be in silver as well, because, this was something, taking the silver short squeeze from 3 years ago now, as an example, that was something that was, touted by many in this space as something that was going to change a lot of people's lives. And I think that frustrated a lot of investors. And there was somebody I spoke with that said that, the metals bull will do everything it can to shake you off before it actually goes up.
That's for sure. So, to speak to that sentiment a little bit about people checking in with you Is this real? Does this feel like it's a head fake or whatever? Like that's, the first phase of the breakout that can give you confidence that it's still breaking out.
Yeah.
It's not until everybody starts high-fiving like, hey, we got it on the run. We're all long. Hurrah, hurrah. It's like when everybody's high-fiving with that hand, that's when I make a sale with the other hand. But we're not there yet. We're still at that phase where, hey, why is my silver going up? Hey, is gold, is this going to go? Like, I don't really have enough on, it's really tough to buy up here, all that stuff. It's like, man, I'm a happy and comfortable momentum buyer. So when I get opportunities like that, I'm kind of usually pretty much all in. And so that's how it's shaping up to me that this is still in the early phases of the rally, I would say, if that's fair.
Mm-hmm. So do you think that we're starting to see some of this, let's say, rotation of capital, rotation from funds that saw this performance in gold and say, I need to have some of that back on after not being interested in it for many years?
Yeah, it had to do, I think, with sort of the range of the gold price just moving away from all the buyers. Mm-hmm. Right. Like you always had situations where there had been central bank buying on dips and physical buying on dips. And now the dips have been dried out. So you get central bank buying on top of maybe fund buying. And, if there's ever a time when, the basic portfolio manager will get his gold allocation off of 50 basis points of his fund, that's when things change materially, and that's when gold becomes another animal. And at new highs like this, I mean, given the situation, I mean, given the debt pile and given, the consumer debt that we're in and the fact that it just looks more and more like a runaway train, gold looks more and more like a necessity in the portfolio, and so until we get around to, real portfolios that I'm talking about, America's funds and State Street funds and Fidelity funds saying, yeah, given what's going on in the world, we should probably have some more gold on. And so let's take this allocation from 50 basis points to 1%. Forget it. Things gone. That happens. They probably buy that. They probably buy miners too, but it's hard to get. That's a slow sea change. You know why? Because the disco ball is still returning 30% a week. Right. And so that's kind of where the competition is. Well, maybe not right now because Nvidia just fell another $30 since we've been on the phone. Highlighting the fact that was the kiss of death when Europe opened up those triple and quadruple levered ETNs on AI. Right. So we shouldn't be shocked that that's backing off. And conversely, after the run that we were just on there, we shouldn't be shocked that the money's coming into the hard assets now. Right. I mean, this is the trade. This is the leadership for this year now. And I mean, it may go back and forth. AI may pull back and Nvidia may pull back, find support, and then go again with the bullish scenario in the stock market and the thought of lower rates. So it's not over. We're in the middle of this battle, but it seems like it's going the way that you want it to if you're long stocks and long gold.
Tony, we've seen that total gold ETF holdings have fallen. How is this bullish for gold? Are more people opting for physical in their possession?
Yeah, I think it's something like that. Either they just decided to lighten up on the GLD trade because it went up their way and, maybe they sold some into that, or it's just that there's less speculation about it now, and it's hard to kind of draw a direct line to what that means, the assets going down, but it does mean that there's liquidation of the ETF, right? There's more selling than buying. And so they have to sell some of the ounces on the pad to flatten it up. Now, if there's an arb where there's buying taking place someplace else that, I don't know, I haven't really noticed that, where maybe there's huge buying in futures and selling in the ETF because there's an arb opportunity there that may be above my pay grade if there's something like that going on. But I haven't noticed, one of the either paper or physical gold taking the lead or something like that. So I think it's just one more factor that you can look at and say, yeah, we're not loaded to the gills long GLD. Like retail isn't long GLD. They're long NVDA. And they're long IBIT and they're long Bitcoin and stuff like that. And maybe not long all this gold stuff. So we'll see how it pans out.
Yeah. See how it pans out and see how that ends up changing over time. Because as you say, I think that's something coming back to this idea of actually investing in a metal, especially a monetary metal, I think is lost on a lot of people, right? And
Yeah,
I
you
think
look
that takes time to come back to that viewpoint.
Yeah, totally. I look at it sometimes generationally, and I look at it like for my kids, and I have them in the awesome portfolio, which is Jared Dillion's portfolio of basically global stocks, global bonds, real estate, gold, and I think he's got cash in there too. But when you think about generationally, you're like, okay, our national debt is exploding at $1 trillion every 100 days now, likely to go faster. That's all going to be monetized away. And where's the gold price going to be when my son grows up and realizes that he needs to put some of his net worth in gold, because now we're spending at $1 trillion every 12 days. Because it's only going that way. It's only going to be $1 trillion every 10 days, until it's $1 trillion every day. And then we're going to go to $100 trillion every 100 days, right? And then that's going to get faster. There's no way out, right? So there's no way out. So we're going to have, generationally as we go, we're going to have more and more people that say, oh my God, I need to own gold. I don't have the gold on that I need to have, or the Bitcoin, or whatever they choose. But to me, man, it's one of the more compelling breakout / investments on the board next to the stock market to me. So
You wrote that we might be handing over our nation's pandemic preparedness sovereignty to a WHO or UN governing body in May. So how does this make the case for gold as well?
Man, that's
guns and gold.
yeah, it does. That's what it is right there, right? Like that is a potential absolute quagmire of a conversation to go into, to think about what America looks like if we hand over our pandemic preparedness sovereignty to, a global body, right? As corrupt as the UN, right? The UN has been getting caught as being the most corrupt body on the planet since I was a kid. We're going back to the oil for food scam, where they were just blatantly stealing money, and so everything that they've done is dishonest. And now they're connected to the first pandemic, which really looks really fugazi on so many levels. And now they're just going to keep pressing because it worked the first time, right? They were able to lock down a nation of 350 people. Nobody said boo. Nobody said boo about the lockdown. And so they're like, okay, since nobody said boo last time, let's just take control over it and wrap it all up. It's like, I don't know. That sounds like people would be like, okay, I need to get out of my monetary system. I need to be, who knows what it means. It's bullish Bitcoin. It's bullish gold. It's bullish guns. I don't know. What would they be saying in 1776 if people were saying, you know what, we're going to scrap the Constitution, or we're going to scrap the Declaration of Independence, and we're just going to figure out how to deal with it, living under these people. How would that feel? So it's like that's a hairy one to me. That's a conversation that I hope, and it's coming up, it's a conversation that I hope gets enough daylight and enough pushback on that, somebody's able to stop the administration from signing it. It doesn't look like it, though. It looks like we're snowballing right to that point where we give it all up.
Yeah, I think it's, as, let's say, prickly of a topic as it is to speak about, it is important to at least, make people aware of some of those developments that they might not understand or have heard of. You've also written about this lack of confidence, or this shift of confidence away from mainstream media. Yet that is a perfect case of let's say, a narrative supply that, there are still plenty of people that pay attention to. And that's why I think it's important to have these types of conversations and at least mention this stuff, so that you can, maybe it pricks your ear and you can go and research it a little bit more, right?
Yeah, I couldn't agree more that awareness is huge. We're not talking about we're not talking about handing over our sovereignty to a global governing body in the news. We're talking about P. Diddy. right?
Yeah,
I mean, and
exactly.
quite purposely talking about P. Diddy, right? That guy was walking around like the biggest gangster rock star, one day, and then we woke up the next day and decided that we were going after him for child trafficking, right? And so that's obviously like, ooh, we need a new craze in the news to sort of take the attention away from whatever else they're doing, the border, whatever it is, right?
Mhm.
Whatever they're covering up, which is something new on it every day. So it's really hard to keep track, but once again, everybody says, "Oh man, I got to own gold." Like what
Exactly.
else can I do? Right? You can only make moves.
Mhm.
You can't stop the guy from showing up at your door saying, "We're confiscating gun," right? Like you're not stopping that from happening. All you can do is, arm yourself, protect yourself, have, gold in a vault somewhere or in a safe and hope for the best. There's really nothing else to do.
So Tony, you were talking about this explosion of the national debt. This in some ways just a running clock on the debt that is, for all respects only going to accelerate. So do you think that this ends up being overall and this time is starting to be seen as a vote against the US dollar, and is that also why you're bearish US bonds?
I don't really have a view on the dollar, and it does line up to weaken, I suppose, but it does. I mean, the dollar index isn't weakening because we're, the cleanest dirty shirt in the laundry kind of thing,
Mhm.
I guess. So I don't really get too bearish the dollar. I mean, I'm bearish fiat currency. If you look at all of the fiat currency charts against gold, they are going down, right, at a varying pace. So when you kind of pair them up against each other, I can't pick out which one is going to go down versus the other one faster. I just rather bet against the field and have gold versus all of them.
Mhm.
So that's kind of how I look at that trade. And continue to monitor them in other currencies because there are things going on. I mean, it's exploding in yen and in euro and things like that. And when gold and US dollars looks like it can't get out of the way, just call it up in another currency and it's probably spiking.
Mhm.
So I guess I don't know if I answered the question, Tom, but I
Yep,
got close.
absolutely. Tony, moving, let's say specifically to oil and copper, do we see the same drivers kind of going forward as this in a way? And I guess we could, expand this to other parts of the commodity complex, but is this a cyclical move from a time of underinvestment into materials that we still, dramatically need going forward?
I think that's right. I think that's right. And they've both been extremely frustrating longs, right? I mean, oil hasn't gone anywhere, right? If you bought it, whatever, a couple of months, it's whatever. It's gone 70 bid at 95. We're somewhere in the middle, like you're not making money in a long oil trade. Although now that you've got the carry back and backwardation, that it looks a lot more attractive and there's not a big spec play in it. But yeah, I think oil and gold are, they were facing a lot of unnatural forces.
Mhm.
They were battling, the Federal Reserve sending the signals of deflation and sending signals of, economic weakness, and we have to cut rates 6 times next year to deal with this, right? And the metals have no choice. I mean, copper and oil, the economy linked commodities have no choice but to kind of fail breakouts and not really go anywhere.
Mhm.
And I heard a great quote from Paulo Macro on the Market Huddle, and I've been in the copper trade like in and out, several times. Like
Mhm.
I could tell you years ago, 3 or 4 years ago, I was doing long Freeport McMoran trade ideas for Real Vision. The copper was roaring. There's a huge deficit in copper. The price is exploding toward 10K, $45, $50 Freeport McMoran. This thing is going to go. 3 years later, where's Freeport McMoran? $45. Right. So it's like one of those things that it hasn't gone. It hasn't broke, it's $50 now, but it just broke out. And I guess Paolo's comment was, the setup is right and this thing is going to go.
Mhm.
But how long it's going to take is a function of how long they took to frustrate everybody and put this thing to sleep and get
I,
everybody out of it.
I actually have the quote. I just happened to be looking at it right before. He says, "We've been working the length out of the market and disinteresting and frustrating people for 2 years. This is going to go. The move out of it is a function of how long and the level of max frustration it took to put the thing to sleep in the first place.
As a trader, that's so satisfying, right? That is like, and I'm in the position, I'm long XME, so I'm kind of looking for reasons to hold on, maybe double, but it's not going. And when you listen to that quote, you're like, yeah, man, this thing really wore people down, right?
Which I think, directly applies to the same exact conversation we were having about the gold and silver trade earlier, right?
Totally. I mean, I remember in 2012 or 2011 when we were trading coins in the street and gold was going up to 2K and we were like, dude, this thing's about to triple. Disappointed again in 2019. And, now you're finally through. Same kind of thing, a big sea change on the other side. So we'll see if that change in dynamic continues. But yeah, it lulled everybody to sleep over a decade or 5 years, let's say. And then all of a sudden, no, it's a full decade. It's over a decade. Right. It's been the battle where it sort of found a high and then backed off. And so, yeah, man. And that's why, if you've been in these markets for a long time and you notice things that trend for a long time and then consolidate for a long time, it's okay to expect them to break out of that and trend higher for years if they've been consolidating for years. Like I've seen that more than 10 times in my career. Where you get that long consolidation in a bull market and it just, like where we are now, where's everyone asleep? And the next thing you've got a 10-year commodity super cycle burst out of the blue, right? Like just like we birthed after the dot-com bubble, right? The dot-com bubble burst and we went into a 10-year commodity bubble, which was China inhaling base metals, oil, gold at every single price to build the military that they're now floating around in the Red Sea. So that was a really wild trade that came kind of out of nowhere. And we're very well set up for that again. If we're kind of, like I said, going back to this referendum on a World War III footing globally in markets.
Tony, you have a position in uranium as well. Do a lot of the same, fundamental drivers at this point apply that we've already talked about in that market?
Yeah, I want that to be a kind of, secular bull, longer standing play for me. I'm a big believer in the sort of COP 28, or COP, whatever the COP number is, at that conference where, basically the world is going to be tripling our nuclear use by 2050, right? We are not set up for that, not either on the, on the mining side or on the nuclear production side. So to me, this is like the rebirth of nuclear that is kind of necessary to take place as we learn that renewables aren't going to be as powerful and reliable as we would have liked. I mean, I'm going over that stuff with my son who's in high school now and writing, he's writing a paper on, the energy markets and solar and wind power and things like that. And so, I think it's becoming obviously a widely covered topic. And, we can point to a lot of different failures in wind and solar, and those markets have all backed way off of their highs. And, the stocks aren't market darlings anymore. And so we're going to have to find a solution if we're going to continue to try to lower our carbon emissions, which, everybody would probably agree is a sensible idea if done in a proper organized fashion, right? That satisfies science as well as everyone's platitudes for, keeping carbon out of the atmosphere for what they really don't know, nor can anyone really enunciate. But, to me, that's a play that's going on that we just have to accept the fact that China is taking dominance of the fossil fuel market away from us. They're playing the trick on us and making us go toward battery power so that we kind of have the head fake. And then if we do that, we're going to have to go get our metals and mining from them anyway. So there's a little bit of a shell game being played on U.S. industry right now. So hopefully we'll get out of that shell game one day.
So is your son bearish on solar as well?
Yeah, no, but I'm sure that he's a gold, and I'm sure that he's a gold and oil bull by osmosis. He just heard enough talk around the dinner table. That's for sure.
Yeah. Excellent, Tony. Well, we've really touched on a lot of topics here today, and I appreciate you really highlighting how you're seeing this stuff. Is there anything you'd like to add before we wrap up here today?
I think it's just to pay attention, and this is a time to stare at your portfolio and stare at the tape and make sure that you are somewhat in step with what's going on.
Mhm.
This is, even this change just started in March. It's April 9th. Super early, man. Like, it's in the top of the first inning, and I'm still in the batter's box, and the pitcher's still warming up
Mhm.
on this commodity breakout, if you ask me.
Yeah.
Right. I mean, we just witnessed observable 7 months of downtrend, and that trend looks like it just changed on a dime, like a bat out of hell, like in large magnitudes with breakouts to all-time highs all over. Like, shit just got started, So I really think that no matter what, even if you're behind the eight ball a little bit, if you start moving some money, maybe out of the sort of broader spaces or technology driven stuff and a little bit of it into natural resources and maybe industrial miners and E&P or refiners, and you just start a little bit of that transition, you'll find that this natural resource money is going to perform just fine.
Mhm.
And it may not put up 30% gains in a month like NVIDIA is capable of, but NVIDIA might not be putting up 30% gains in a month anymore either. So
Fair.
relatively speaking, you're going to have to take what you get from the markets now.
Mhm. Yeah, I think it's interesting to think about that just from a positioning and a market size standpoint of what amount of money can move these natural resource markets in a dramatic fashion, right? It's a fraction of what has moved a lot of these fancy tech stocks.
Tom, the timing was such that, I trade my trading account like a wild man all day, every day, but I do a check on my retirement accounts and my other investment accounts quarterly.
Mhm.
And I look at the market performance first. I do my studies and I do all my work for TG Macro. And then I go into my own portfolio and make sure that I'm aligned. And this year I was like, okay, we got a big leadership change. How's the portfolio? Whoa, I'm not there yet. Like, I got some rearranging to do. Like, I'm not happy with this here. This is last month's trades. Like, let's move some of this out. Let's take some profit here. Let's get into this thing. Like, come on, let's get with the program. And I feel like portfolio managers are just starting that.
And you're somebody that's paying attention to this stuff. Imagine when the people that have been asleep at the wheel find that as well.
They don't know it until it hits their statement, as in hits the statement.
Mhm.
Oh man, all this tech, I'm down 10% this month. Fuck. Yeah, I forgot to sell that. Jesus, now what's going up? What the hell? Gold. I don't have any gold, and then next thing you know, it's like everybody's like, yeah, you know what? Get rid of this NVIDIA at 750. Let's buy some gold at 2,500. Who knows what could happen? Crazier things have happened.
Absolutely. All of Tony's work is available, tgmacro.com, TG Macro Substack as well. Excellent Twitter follow at TG Macro. Tony, thanks so much for your time today. Always a pleasure to speak with you, man.
Tom, thanks for having me, man. You drive a great market conversation. I love it.
Thanks, sir. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.